Hello and welcome to the Brent Bruce Daily. Today we are going to do a little quiz here and we're going to see how you're doing on learning how to see the effects of the general economy when it comes to home loan interest rates. Today is July 14th. It's 3:06 Central Time. So we're going to take a look at a couple of things here and then we're going to ask you, what do you think home loan interest rates are doing today? So here is our indicator. Today, wholesale prices shoot up to near record levels of 11.3% in June. This is based on the producer price index, okay? And this is, again, an inflation index to tell us if we think that the cost of producer prices are higher or lower versus yesterday was consumer prices. So if the producer's prices go up, what do you think is going to happen? Are they going to take less profit? Or are they going to increase the price of their product, which means that eventually that is consumer price inflation. So inflation went up again today. This is another reading of inflation. This one's at 11.3. Okay, so we're talking about consumer prices at 9.1 was through the roof, but this is at 11.3. So once again, inflation numbers coming in hot. What does that do to our mortgage-backed security? Well, you will notice here that we're down 22 basis points for the day. But we were way lower. We were down all the way almost 60 basis points down when the producer price index was officially came out this morning. So that's that knee-jerk reaction that I talk about quite often, that you see a big pullback because everyone sees a number come out that's shocking, a little bit worse than expected, and then everyone kind of settles in, slows down, and starts to kind of settle the market. So this is indicated here. So you see these are all green, and green is good. That means that things are up. But what this is telling us is that this number, basically at 10 o'clock Eastern time, where the market was at that time, right now we're up 23 basis points from that period. Okay, so that's why you're seeing green over here. But right now we're down 22 basis points on the day. The 10-year Treasury is up 5 basis points. Again, we don't want this to go up. We want this to go down. And over here, we don't want this to go down. We want this to go up because they're inverse chart. This is an inverse chart. So over here, we see yesterday the market, the mortgage-backed security market plummeted, which we don't want. And then it fought its way back up to the 25-day moving average, this line here. This morning, plummeted because of the producer price index that came out. And now it is climbing its way back up again and really banging off of this 25-day moving average. Sorry about that, phone ringing. 25-day moving average we're bouncing off of here. So what do we think home loan interest rates have done? So think about what we've learned. Do we think that today home loan interest rates are worse than they were yesterday, they're better than they were yesterday, or they're the same as yesterday? So yesterday we were talking about a 5.375% interest rate on the Brent Bruce daily scenario. Let's take a look. Here we go, the Brent Bruce daily scenario. And I am going to jump in here and we're going to click view all results. And where are we? Well, if you thought that home loan interest rates were up a little bit, you were correct. 5.5% with a credit of $1,116. Let's open this up. And if someone's willing to pay a point, like right, this is just under 1 point, they're going to get a 4.99. So we're still not out of reach of that 4.99, but the way that things have been going and the reports that have been coming out when it comes to inflation have been pushing interest rates up. You're starting to understand. I can tell, I can see it in your eyes that you're starting to understand how interest rates move and why interest rates move. So real quick, before we jump off here today, let's check. First of all, this is the Brent Bruce daily scenario. Again, this is the perfectly well-qualified $480,000 purchase price with 25% down, 800 FICO score. Everything is perfect. Okay, so let's do something different here. This is a Tennessee zip code. I do Tennessee and I do California. Really, the pricing is the same. So let's go over here and let's go FHA. And let's do 96.5% our loan amount, which is, if you're in the business, that's a very standard FHA loan, one of the most popular home loans for anyone that is looking to put less of a down payment. So let's run the scenario here because it is just amazing the gigantic difference between what I see the mortgage banking world selling an FHA loan for versus the mortgage broker world. So as you can see right here, we have a bank offering a 4.75% interest rate on FHA right now with no points, actually with one $3,447 in credit. And if I open this up a little bit, Flagstar is going to allow us with one, actually, 4.75 there. With 1 point, you're at about 4.5. I mean, you're close. This is just under a little bit over 3/4 of a point. You're at 4.5. Okay, so 4.5 on a 30-year fixed mortgage right now is available with our company here. So that is what is going on. Continue to learn how home loan interest rates work. Let me know what questions you have. Let me know what you'd like me to get a little bit further into, and I will get back with you again tomorrow. Have a great day.